Hi everybody, Michael Hill with Enterprise Real Estate here with your market snapshot for the middle of September. I think everyone must be seeing all the same reverse mortgage commercials that I'm seeing because I'm getting a lot of questions about reverse mortgages. So I thought I'd take 3 or 4 minutes here today and share with you what I've been hearing. Now, I don't make loans and I don't accept referral fees from lenders, but I deal with lenders every day as an agent and as an investor, and I know all the mistakes that borrowers make because I've made them all. So call me if you want to find a good lender, and that includes reverse mortgage lenders. Never have I seen a loan product that has been surrounded by as much misinformation as reverse mortgages. This is because I think most people still think of reverse mortgage as the old needs-based loan of last resort. Oh no, grandma's in big trouble, maybe we need a reverse mortgage. That changed significantly in 2008 when Congress passed HERA, the Housing and Economic Recovery Act. And in that act, which was designed to save Wall Street and the banking industry, in 16,000 pages of law, there was 12 pages devoted to radically modernizing and reducing the costs of reverse mortgages. But many people aren't aware of all those big changes. So here's what I've been hearing from people who have been considering reverse mortgages. Some of the myths. The kids are against reverse mortgages. I've been in the real estate and loan business since 1984, and I have never heard, gee, mom and dad died, and I'm so mad because I didn't get my money. And when we talk about the children of people in their 70s and 80s, we're not talking about 12-year-olds. The kids of these people are typically 30, 40, 50 years old. How many people do you know put their own inheritance above the quality of life of their parents? So when I hear seniors recite this myth, it makes me cringe. Mom and dad not having that $800, not having that $1,200 house payment for the last 15 or 20 years of life is literally giving them hundreds of thousands of dollars of liquidity to spend on their quality of life. I don't know anyone who tells their parents, don't do that, I need to make sure I get my money when you're gone. Another myth, many people think that the reverse mortgage lender owns the home when the last borrower dies. I mean, come on, doesn't the mortgage lender really just own the home? That's not true. What happens to a regular mortgage on a home when the last borrower dies? What would happen? The most common scenario is that the bank calls the heirs and asks them if they want to keep the home. If they do, they refinance the balance and they pay off the bank. And most of the time, the kids say no, that was mom and dad's home, we have our own home. And so they call their friendly realtor and a sign goes up in the yard and the house gets sold. And the heirs satisfy the mortgage and they pocket the profit. What's the difference with a reverse mortgage? There is no difference, except in one way, which benefits the family. By federal law, when a reverse mortgage is paid off, if there is a profit, it goes to the heirs. If there's a shortage, however, that loss is taken by the bank. And this is a huge benefit for the estate because it protects against having to liquidate other assets to pay off the reverse mortgages. Many people think reverse mortgages are for poor people. Well, that may have been true at one time, but not anymore. The recession of 2008 was a perfect storm for many seniors. Millions of people were forced to adjust to lower returns. And for people on fixed incomes, a lower return means a lower quality of life. Whether you live on Social Security and a small pension, or you have Social Security and a pension and a sizable investment portfolio, a lower return means less liquidity, and less liquidity means a lower quality of life. Today, some of the finest financial planners in the United States look at the reverse mortgage as one of the strongest financial tools. The ability to use your housing wealth while you're still alive so you don't have to use up your liquidity, so you don't have to use the money in the savings account. This may sound like something new, but the world's changing to this new set of realities. And really the last of the big four that I hear about reverse mortgages are that the costs are too high. Again, not anymore. The fact is that until April of 2010, the closing costs on a reverse mortgage were the highest of any FHA, any conventional, any VA loan in the country. They weren't usurious, they weren't against the law, but they were high. That law was changed with HERA, and now the costs that are associated with reverse mortgages are competitive with every other loan product, and many safeguards are built into reverse mortgages that protect seniors that other loans just don't provide. So my advice is this: before you listen to a paid TV actor or a politician, tell you that a reverse mortgage is the best thing around, or before you listen to a cynical neighbor tell you that they're a ripoff, get the facts. I mean, you can always call me direct and you can explore your options. Even better, go to our own Enterprise Seniors website. We call it seniorrealtors.net, and you can download your own copy of the National Council on Aging Reverse Mortgage Guide. It's free from us to you. We use National Council on Aging information because they are senior advocates and they have the best information around. So I hope I've given you some value for your time today. Until next time, this is Michael Hill with Enterprise Real Estate, wishing you health and wealth and happiness.